When we review investments, it's really important that they have some consideration of ESG as a whole. We are UNPRI signatories, and the UNPRI is the United Nations Principles for Responsible Investments. You know, there are certain political movements suggesting that ESG is a new fad. The reality is it's been around for a long time. And you know, one component, in fact, the largest component of that is governance. And that's something that we've embraced as an investment community for over 100 years. And you know, there are plenty of issues around succession planning, as we've seen with Qantas, but one could argue that Qantas wasn't an issue of succession planning. Qantas was an issue of potentially a lack of governance. Some of the things that have come out do suggest that there were things not being done right. When we look across other components of ESG, so environmental and social components, they tend to feed in and very closely interrelate with the governance component. And so from our point of view, we consider all of those factors as part of the risk measures that we use when we're looking at any company or indeed any strategy. Reflecting on the earnings season that we just went through here in Australia, it was really a mixed bag. I guess we would describe it as being normal. What stood out was the ability or the inability of companies to provide forward guidance. If you're not confident that you can provide an accurate guidance or forecast of how your business might perform, then it probably doesn't make sense that you do it. Of course, the absence of guidance was seen as quite a negative. For us, I think in a lot of cases we see that as an indication of prudent management. Obviously, if we have a feel for the industry, we can look through that. The results that came out of the Australian earnings season were quite interesting. We do have consumer confidence at very, very low levels. We have household saving, continuing to plummet, and we have disposable income contracting at the fastest pace it's been at in 30 years. The health of the consumer is holding up, but it does remain to be seen how long that can be sustained. So the cost of living pressures are still there, but whilst labour markets remain as robust as they do, you could argue that the consumer could persist through this, but it's certainly something that's a key area of focus for us. We've also seen it pretty much resist the market forces that suggest that it should be turning a bit, that unemployment should be increasing. So it really is hard to know whether that is sustainable. One would expect that, given the tightened monetary environment, that layoffs do have to happen at some stage. It certainly happened in the US, particularly across the tech sector. We have seen labour market strength and aspects of labour hoarding, as a hangover from the pandemic, really driving a really strong labour environment.